Hi, I'm Bill Piacatelli. I'm a partner here at Cortado Group with a focus and specialization on sales, marketing, and customer success. A good example of a back to basics performance improvement, specifically in portfolio operations, really just comes down to understanding, who your buyers were. I was working with a healthcare company in the radiology space, and the reality was they had a downturn in churn. They close rates were tanking. They went from 20% to 15% to 10%. And the reality is a great product only gets you so far. So going back to basics was really identifying the buyer's journey and how those customers want to buy, making sure that there was a clear sales process with good exit criteria for those reps to actually execute against, and making sure that there were clear KPIs and accountability measures for everyone inside that go-to-market organization. When you get back to those fundamentals in your sales or go-to-market execution, these are the things that I see, right? We went from 10% actually to a 32% close rate. Retention and NRR specifically went to 115%. The reality is this company increased revenue by $20 million in a little over 2 years, gains. And what the end result of that was a successful exit. One proof point I trust more than any other retooling or system changes is just pipeline clarity. What I hear from CEOs and CROs, we just have a forecasting problem. The reality is you don't have a forecasting problem. You have a lack of fundamentally holding reps accountable to where deals are. So when I look at just your pipeline, I look to see, all right, where are the deals? What stages are they in? Why are they there? Did they meet the criteria to even exist? And then what are the clear next steps and why, right? One of the things of sales that we always need to answer is why buy? Why buy now? And then why buy from us? And if your pipeline report and your pipeline calls can't answer that question, then you have a challenge in your proof point of can I trust my forecast? And that's a proof point I look for every time when evaluating a company. Why does operational alpha feel dated? For me, it was a buzzword trying to solve the same challenges that we see over and over and over again. We don't have leads, we need to generate leads. We don't have our reps are not retiring quota. Why is that? The term operational alpha just goes back to the same challenge that we've been solving in go to market, or folks have been trying to solve in go to market for decades. So there's really nothing new here except a fancy name. Why is it so important to build on fundamentals? The reality is performance conditions are going to are 50% of the equation, and then those fundamentals are where you want to place good talent. So if you want good talent, they need to have a thriving environment to actually play in. So if you're looking to hire a VP of sales, or you're scaling a team of 100 to 200 reps, well, how do you do that at scale? You need systems in place. You need to have your ICP, you need to have your buyer personas, your sales process, your KPIs. We need to have comp plans in place. And if we're looking at doing that type of expansion, what does territories look like? 250 reps, we need to make sure that things are really fair and balanced. So if I'm an operating partner and I'm looking at this holistically, I need to create an environment for the go-to-market team to thrive in. And that's really critical. We need to build on systems, not necessarily heroic efforts of single reps. When I'm advising a company on going back to basics, where are the areas that I typically focus on? It's always the metrics, right? Or do we have a decline in revenue? Great. Why is that? Are we losing customers to churn, or are we not hitting our growth targets for top line? When I'm advising the company on which of those things are really degrading, we have to go a double click down. So if it's churn, are we losing to competition? And why is that? Does our team not have a regular cadence with our customers? Are we speaking to the people that love and enjoy our systems? We don't know. So until we're actually working with the CEO and the go-to-market team, we really need to start at the metrics and where those core problems are, and then peel back the layers of the onion. So whenever you're evaluating your ideal customer profile or ICP, there's a number of things that can change who your target customers are. And there's a laundry list of those. Market conditions, product changes, competition. And I always look at where is your right to win? And we always go back to the customer. What do they love about us? Are there any patterns that we can look at, people that buy? To begin with. And then do they buy more, right? That's your expansion. So we look at those patterns inside the data. We look at what the reps are saying and what the customers are saying. And generally, you do see pockets of goodness of where your right to win is. For example, I was working with a company where they thought every single software company was a good target. And the reality is, yeah, they could solve the problems. But the reality is, in the beginning, they were working with HR companies. 6 years down the road, their markets has changed, the company has changed, the product has changed, the value propositions changed. Financial companies and logistic companies were their right to win now, and they've been working off an old ICP. It is the ownership of the company and the portfolio company to refresh your ICPs to make sure you're changing on where you have the highest probability to win with shorter cycle times. And the reality is you get your highest averaging deals from customers that just absolutely love you. The biggest risk to pushing back to basics is that a lot of these tools and systems have been in place and historically they've worked. And now they're not, but we don't believe that our ICP or our sales process is the issue. It's somewhere else. It's a market condition issue. It's a customer issue. It's a product issue. It's never a positioning issue. It's never going to be a sales process issue. It's not a comp issue. We compensate our reps well and they're doing all the right things. So it's more of a belief that we've already done this and those things don't need to change. So, in evaluating going back to basics, here's one consideration where it may not be the right move for you. We look at a go to market system as 50% talent and 50% performance conditions. We've done the right things. We've put in an ICP. We regularly update it. We've got the right sales processes. We've interviewed customers. Going back and doing that work without evaluating your talent is something you absolutely should consider. So if 60% of your reps are not hitting quota or above, it's likely you don't have a back to basics issue. You have a talent issue. So look at your challenges holistically. Yes, you should consider back to basics, but do it from a lens of talent as well. There's different inflection points in the growth of a company. The systems and tools and people that got you there in a million to 10 million to 50 million are not going to work anymore. There is a certain piece that you go back to basics to make sure that you can scale it to that next level. So if you're looking at why does this really matter to you, it's always to get to that next stage of growth. And you should always reevaluate those tools, processes, and people that got you there and say, is this really the right move for me now? And change is hard, and that's where we meet most of the resistance. But there are hard decisions to make, but they're ones that had to be done.